This one's wonky, but it's really interesting and it's really important. We talked about this a lot with our money manager clientele recently. From December the 13th, which is right here, the S&P 500 or SPY added a bunch of money. Look how this accelerated. Total net assets in SPY. Look at all this explosion of assets here. This was 10% at one point. Right now, you can see some of these longs have liquidated. So now $31 billion or 7% of the total assets invested in SPY are all above 46, let's call it 46.90. This 46.43 is not really accurate. Let's about 46.90. And I think we've settled at 47.05, 47.10. This is really 46.90. Again, I threw these together this morning. So that means 7% of all the money invested in SPY, and there's billions and billions of dollars in there, is all invested up on top. I call these Jenga markets. If you ever played Jenga, as the stack of wood gets taller and taller, and it gets really top heavy on the top, very easy for it to blow over. So what does this mean? This means if we break down, it means underneath 46.90 in the S&P, $31 billion of newly added assets since the middle of December, or 7% of the total assets invested in SPY, are all very quickly in the red. Why does that matter? Because this was a feeding frenzy at the end of the year, right? Right around December. Oh, goody, Santa Claus rally, let's go. Or, I missed the boat. I was sitting on my hands. Now I got to do something. I'm a fund manager. It's the end of the year. If I don't, trying to make their portfolios look better if they were chasing the index. So that you had this big food feeding frenzy here. Underneath 46.90 puts all that money underwater. That can kick off some acceleration on the downside. So again, it's a trading thing and really not an investment thing, but it's a unusual event that bears paying a little bit of attention to.